As we are speaking, Denison Mines Corp, ticker DNN, is trading live on the NYSE American at $2.81. That is down 11 cents on the session, a sharp drop of 3.77%, and it's happening on significant volume as the market digests breaking news. Now, most people watching this stock today probably see that drop and assume it's just typical volatility for a uranium developer, maybe a reaction to the spot price of uranium, or just sector-wide profit-taking after the massive run this name has had. The common belief, the expectation, is that Denison is a straightforward story. They are on the verge of permitting the world's next great low-cost uranium mine, and it's just a matter of waiting for the final regulatory stamps. The reality, however, is that today's 3.8% drop is not about the spot price. It is about a specific, unexpected, and potentially serious new legal challenge. Just hours ago, news broke that the Peter Ballantyne Cree Nation has filed an application for a judicial review in Saskatchewan. They are seeking to set aside the provincial government's environmental assessment approval for Denison's flagship Wheeler River project. This isn't just noise. This is a direct challenge to the project's legal foundation, claiming the government breached its duty to consult. This single piece of news fundamentally alters the risk profile and is the entire reason the stock is breaking down through key technical levels as we speak. Let's look at that movement right now. The stock had been trying to consolidate above $3, and it had even recently traded above the average analyst price target of around $3.16. That move suggested a lot of optimism, maybe even that the stock was getting a bit ahead of itself. But today's volume is clearly pointed in one direction. We are seeing the price slice right through what traders saw as a key support level around $2.86. A break below this level on high volume, driven by negative news, is a serious technical signal. This isn't the slow meandering of a Tesla stock on an average Tuesday. This is the sharp event-driven volatility that defines a junior resource developer. This is where retail investors, perhaps checking their Robinhood app or SoFi Invest platform, see the red and start to panic. Meanwhile, institutional desks using interactive brokers are scrambling to get their legal analysts to read the court filing, trying to determine if this is a minor delay or a genuine threat to the project's timeline. The expectation for Denison has always been built on a few key pillars: a massive, high-grade uranium resource in the world's best jurisdiction, the Athabasca Basin, a technically brilliant and low-cost mining method, in situ recovery, or ISR, and a clear timeline to production. The company's own guidance has been very positive. They've reported that the detailed engineering for the Phoenix deposit at Wheeler River was nearly 80% complete as of mid-year. They successfully received that provincial environmental assessment approval back in July. The next major catalyst everyone was waiting for was the final federal approval from the Canadian Nuclear Safety Commission, with public hearings scheduled for this quarter. The expectation was that these were the final, almost procedural steps before a final investment decision. This new judicial review completely challenges that expectation. The reality is that the provincial approval, which Denison and its investors thought was a done deal, is now being contested in court. This introduces a timeline risk that simply did not exist yesterday. Denison's official response stated they were not made aware of the nation's intention to seek this review, which is a concerning statement. It suggests a potential disconnect in communications, and the market hates surprises, especially of the legal and political kind. This is the kind of risk that you don't see when you're buying Fidelity mutual funds or broad Fidelity ETFs. This is the specific, concentrated risk of a single asset developer. When you are doing your self-investing in a name like DNN, you are not just betting on the price of uranium. You are betting on this company's ability to navigate the complex legal and social landscape of Canadian resource extraction. So, what does this mean for the stock? In the short term, the trend is broken. The stock is below its 20-day moving average and testing deeper support. The narrative has shifted from when to if in the minds of many traders. The upcoming earnings call, which is scheduled for this Thursday, November 6th, just became the most important conference call of the year for this company. The expectation was that this call would be a celebration of engineering milestones and a confident preview of the final federal hearings. The reality is that this call will now be dominated by analysts asking pointed questions about this lawsuit. Management's tone, their clarity, and their legal strategy will be scrutinized more than any financial figure they report. If they sound confident and prepared, the stock might stabilize. If they sound surprised or defensive, this sell-off could get a lot worse. This is a perfect example of where online investment requires more than just following a trend. You can't just put this in one of the Schwab Intelligent portfolios and walk away. This stock requires active monitoring. For those who have been looking at Fidelity investments or considering opening a Fidelity brokerage account, DNN represents the high-risk, high-reward end of the spectrum. It's not a safe stock like Apple stock, and it's not a high-growth tech story like NVIDIA stock. It is a commodity play, and a development stage one at that. Let's quickly define what the company is for those who are new to the story. Denison Mines is a uranium exploration and development company. Its main asset is its 90% ownership of the Wheeler River project in Saskatchewan, Canada. This project is considered one of the best undeveloped uranium assets in the world. It contains two high-grade deposits, Phoenix and Griffin. The plan for Phoenix is to use in situ recovery, which is essentially dissolving the uranium underground and pumping it to the surface. This method is expected to have an incredibly low operating cost, making it highly profitable even at lower uranium prices. Denison also has other interests, including a 22.5% stake in the McLean Lake Mill, which is already in production and processing ore from other mines. This provides some cash flow and technical expertise, but the entire value proposition, the multi-billion-dollar dream, is tied to getting Wheeler River built. This is the central tension. The expectation is that Denison is a technology and geology story. The reality, highlighted today, is that it is also a legal and political story. And right now, the legal and political risk is winning. This is a crucial moment for anyone with an individual brokerage account holding this stock. You have to ask yourself if your original thesis is still intact. Was your thesis, I want to own a future low-cost uranium producer? If so, you have to decide if this legal challenge is just a temporary roadblock or a fundamental impairment to that future. Now, let's talk about the broader picture. The long-term bull case for uranium is stronger than ever. The World Nuclear Fuel Report from just a few months ago forecasts that global demand for uranium will more than double by 2040, driven by decarbonization goals and a new wave of nuclear reactor construction. We just saw reports from Kazatomprom, the world's largest producer, reinforcing this long-term supply-demand imbalance. The world needs new uranium mines. The expectation is that high-quality projects like Wheeler River must be built to meet this demand. That long-term reality hasn't changed. What has changed is Denison's position in the race. This legal challenge could delay their project, allowing competitors to catch up, or worse, forcing Denison to spend millions on legal fees and project redesigns. This is why the stock is selling off. It's not about the long-term price of uranium. It's about the net present value of Denison's future cash flows, and a delay is a direct hit to that value. I want you to comment below. Do you think this judicial review from the Peter Ballantyne Cree Nation is a serious threat to the Wheeler River timeline, or do you see this as just a temporary delay and a buying opportunity? Let me know what you're doing with your shares. As we look ahead, the path forward is now incredibly binary. The stock is reacting to a new negative variable, but the analyst community remains overwhelmingly positive. According to the latest data, of the 12 analysts covering the stock, 7 rated a strong buy and 4 rated a buy. The average brokerage recommendation is a 1.50, which is extremely bullish. Their price targets, which range from a low of $2.72 to a high of $3.60, are based on models that assume Wheeler River gets built. This creates a massive disconnect. You have analysts that major